going to turn things over to John and Rachel.
Okay, I wasn't as sure if I could unmute my own line, but clearly I am. First things first, everybody hear me okay? I don't, I could probably take the camera off if nobody wants to see me. However, I see some familiar names on there, so I will say it's nice to virtually see many of you, and I hope that you're everybody in your world, your family and friends are all healthy and safe. Rachel, I don't need to necessarily kick this off unless if do you have something else to say? Do you want to kick it off first?
Thank you all for joining us. As John said, we're having some familiar names and see you all virtually. We wanted to put this together, and I'm glad you were all able to give us some of your time so that we could give you an update. I'm sure you've been seeing all of our MICPA member alerts with kind of what's been going on as far as legislatively with the filing extension being extended through July, which I hope is some relief for all of you. The self-study cap has been lifted for this CPE cycle. So for any CPE that you're earning through June 30th, you can take as much as you want via self-study. There's no cap this year to provide a little bit more flexibility for earning that CPE. Also, just a little reminder that if you are taking a webinar, it's considered group live. So it doesn't count towards that self-study cap. That's not applicable this time, CPE earning cycle, but just moving forward, just a little reminder there that you can take webinars as group live. And we've been doing our best to keep you all informed with what's going on from the state side of things, and we're happy to answer any questions that you might have.
Okay, so if you see me looking down, a lot of people on the phone probably laugh. I still give myself a little bit of a hard time. These last few weeks have forced me into embracing some technology that I have been resisting for quite some time. So what I'm doing and looking down is I've actually emailed myself a couple of bullet points this morning so that I can view them on my phone as opposed to flipping back and forth between this screen and my notes on my laptop. I don't have the dual monitor system set up in my home office, unfortunately. So the first thing that I want to do is one of those unfortunate disclaimer type situations where today's conversation, as long as it goes, I think it's scheduled for 90 minutes. It may not take that long, whatever it is, but I know most people on the line already know this, but please understand that I'm not an attorney, and anything that I say today cannot be accepted as any level of legal advice. I want to try and do our best to avoid any conversations relative to the questions of am I or am I not an essential workforce, infrastructure workforce member? Can I continue to do these things or can I not? There's a lot of information out there on that very thing, and we can point you in the direction for more information on that, but I want to try to avoid the can we do this or can we not do that type questions, just because those are questions that need to be answered through legal counsel and in a little bit higher level. That said, that's a very good segue, if you will, to where I do want to direct everybody. If you're not already aware, or if you're not already checking websites relative to information, I want to add one to your list, and that's the state of Michigan's website. If you go to www.michigan.gov, very clearly there on that home page is a link to the coronavirus website that the state has set up. If you then go there, there's a ton of resources available to you at your fingertips on the state's website. But more, I guess more poignantly, there is information. There's a link to any of the executive orders, the text for those executive orders and executive directives. Many of those executive orders have FAQs on them that are updated regularly with more guidance insofar as the interpretation of those executive orders is concerned. And then there's also a web page for all press releases. Now, I realize that that may not be a normal source of information for people, but those press releases actually can give you a very, very good idea to what's going on right now between the executive office of the administration, the attorney general's office, and otherwise. So I wanted to point you to those resources at the start of this conversation. Relative to a legislative update, quote unquote. Many of you on the call or on the Zoom here today have heard me give legislative updates in the past, and there really isn't much to update you on, just simply because there's very little going on in the legislative world right now, as you can probably imagine. A few things that I want to touch on. Number one, the legislature is going to be coming back into session in Michigan a week from today for the single purpose of extending the governor's emergency declaration and executive orders. The way that the Constitution in the state is set up is many of those executive orders and the emergency declaration that the governor did can only last so long before they have to be re-upped or reauthorized by the legislature themselves. So they will be coming back into session a week from today for the sole purpose of doing that. Meanwhile, a lot of things are still going on, as you can imagine. The legislature, the House and the Senate and the governor's office have been working very well together over these last few weeks in coordinating messaging and intent relative to these executive orders and some of the steps that they're taking. So, for example, tomorrow you can expect, and I don't, again, no guarantees, but at this point in time, we're expecting tomorrow there will be an executive order issued from the governor relative to the school year and what's going to happen for public schools, charter schools, and the like here in the state of Michigan for the remainder of the school year. And that's been something that the reason it's taken as long as it has is because, as I'm sure you can understand, that's not a simple task. It's a complicated matter, and it's something that's very important that the governor and the legislature are on the same page with before any action is taking place. I will tell you that we've got a financial problem in the state of Michigan, and it's not unique to the state of Michigan, of course, but the reality of what the impact from the state budget standpoint is starting to set in a little bit as steps are trying to start to be taken relative to developing the 2020-2021 fiscal year budget for the state, which is, of course, what the legislature would be focused on if they were in session right now. As it stands today, we're expecting someplace between a $1 and $2 billion shortfall in general fund and between a $1 and $1.5 billion shortfall in the school aid fund. So combined someplace between a $2 and $2.5 billion shortfall in the general fund and the school aid fund. A lot of money is coming from the federal government, as I'm sure many of you read about, et cetera. That money, as it's related to the dollars that are being provided right to state and local government, have restrictions on them insofar as they can only be used for expenses related to COVID-19. So it's not just a situation where they can use those federal dollars to backfill other portions of the budget. So again, we're in a situation, as you can imagine, it doesn't take not to be cliche, but it's not rocket science to figure out that sales tax revenue, income tax revenue, all of those types of things is just simply not flowing to the state right now. So gas, they're expecting, again, someplace between a $2 and $2.5 billion budget shortfall, which is going to create some significant issues, as you can imagine. School year, I talked about the EO. Two more things I want to touch on, then we're just going to go right to questions, unless, Rachel, there's something else that you want to add. Number one, I'll touch on this first. A lot of conversation have been had recently. Firms, yourself, I'm sure people are digging into the Federal CARES Act package and what that means. I don't want to steal anybody's thunder on the forum, but I want to let you know, as you're advising clients or your businesses about specifically the Paycheck Protection Program, the PPP, and what needs to be done there. The MICPA is partnering with the Small Business Association of Michigan and others on the development of some resources and tools for use by those who may not have a relationship with a CPA or accountant or a financial institution. So what I mean there is this: you've got a lot of businesses that are looking to leverage those dollars, those loans, which essentially are grants for all intents and purposes, that have a relationship with a CPA, or they have a relationship with an accountant or a financial institution. but there's a lot of businesses in the state of Michigan that don't. I use the example of my neighbor who owns a vinyl siding business. He does siding work and trim work, like the trim around your garage door and that type of stuff. Very successful business, employs 6 to 8 people, but he does all of his own books. He doesn't have a relationship with an accountant or a financial institution. He would benefit greatly from these dollars, but he wouldn't have the first clue of where to go to begin that process. So the MICPA is working again with SBAM and others to develop a resource on there. So as you're preparing for working with clients or your employer and elsewhere on the facts and the money that's available through the CARES Act at the federal level, I would encourage you also to keep your ears and eyes open to messages from the MICPA about manners in which you can give back. I think we found a nice niche for the community and how maybe we can be helpful in giving back. The last thing I want to say is to give everybody a little bit of a glimmer of hope. And this isn't something that you're going to read about in the papers. And frankly, I'd appreciate it if it's not something that I do read about in the papers after letting you know this, but a little bit of a glimmer of light at the end of the tunnel. The governor's team, as they're working hours, as you can imagine, 21 hours a day, these folks are working right now. And as they're developing the executive orders on education and other areas, trying to figure out where all of these pieces fall into place, managing supply chain issues that some of us will never fathom relative to things like, this hospital running out of gloves and XYZ. The team has started the process of developing the executive orders related to easing and lifting restrictions in the state of Michigan. These aren't things that are going to be coming out this week or next week or probably the week after that. But it's important to know that the work is already being done on, okay, when that time comes, in what order do we start lifting these restrictions? And those are things that need to be contemplated, of course, to make sure that we're doing it right. But I think it gives at least me a little bit of a warm feeling of hope relative to the fact that at least those that are making these decisions are already contemplating the best way to lift those restrictions when that time comes. Again, that gave me at least a little bit of a positive sense of things. So with that is truly all the points that I wanted to cover right now. I will mute my line, Rachel, if there's anything you want to add, and then we can probably get right to the questions.
Yeah, I think you covered everything to update the group on what's going on, and a little update on things that they're reading on the papers and some inside scoop. So with that, we can open it up to questions, and we're happy to, I think Jody's going to unmute everybody, and then we'll see how it goes.
All right, everyone should be unmuted or, yep, it looks like if you have a question, go ahead and feel free to fire away.
FYI, this is Dan. You should probably record this.
I think it is recording.
Yes, I believe it is being recorded, and we'll be able to play this back for members who missed it.
It is being recorded.
John, it's Rick Dave. Let me ask the first question. You didn't want to talk much about it, but are they moving along any discussion about whether counting is essential services? Which states have done that? What are they just not going to address it right now and just deal with everything else, or what's happening in the area?
So that's a complicated question and it's a complicated answer, but let me do my best to try and address that. So different states have addressed this entire conversation differently. And what's happened in Michigan through that executive order and the way that it was structured in referencing the United States Department of Homeland Security CISA or CISA guidelines, with very few exceptions, in Michigan, it has not been it was not structured to deem a profession as essential and all things that that profession does as essential. There's some exceptions to that, but insofar as the world that we're operating in is concerned, it's what this executive order contemplated are from the perspective of what services you provide and whether or not those are deemed essential. So I'm going to use an example that I've used a number of times to try to illustrate what I'm talking about. If you look at the CISA guidelines for financial services that are referenced by the executive orders, you're going to see a number of things that point to those services that are traditionally provided by a CPA or an accountant. Services that support the capital market activities, right? Access to lending services. It does mention specifically, quote unquote, accounting services in there. But deeming the entire profession and everything that the profession does as essential is not how this was contemplated nor being implemented. The example that I use, and I might get some pushback on this, but the example that I use is if a member of your team is working on a litigation support or business valuation engagement that may or may not go to court at the end of November in this year, then that is not essential, and that person should not be compelled to go to the office. That's probably I guess the best. I operate in a world of examples sometimes to illustrate my point. So forgive me for using that example if it rubs you the wrong way, but that's the best way that I can illustrate the point. We do not expect, as we sit here today, I do not expect to hear from the administration some level of additional guidelines or guidance that says, yes, all things that accountants and CPAs do is deemed essential. I don't, and I'll get to a couple points here. I don't expect that guidelines. And if we were to push for that, we've asked for that, but if we were to push for that, we may or may not like the answer that comes. And that's the reality of what you're seeing here. Golf courses should have kept their mouth shut. And I'm being pretty frank with everybody on the line right now. Golf courses were doing just fine in implementing CDC guidelines and social distancing and all of the above. And they pushed and pushed and pushed for this governor to say, we can stay open if we're a golf course. And this governor said, you know what, you can't. And now you've asked for the guidance, here it is. You can't stay open. So the important thing to remember is, and this will be my last, we'll get on to the next question. The way that this executive order is structured, again, deeming some service or some profession essential does not get around the smell test, so to speak, of number one, it still needs to be something that cannot be done remotely. You know, you can't compel people to go to the office just because all of a sudden this service was deemed essential. Can it be done remotely? If it can be done remotely, it must be done remotely. Number one. Number two, is it necessary for the protection and sustaining of human life? Right. Those are the other kind of smell tests that are out there.
Thanks, John.
Hi, this is Jerry. And I was wondering, are you able to answer any questions with respect to the Paycheck Protection Program?
Jerry, I can try, but there's going to be experts that are, so go ahead and shoot your question.
Anyway, there's some confusion in the marketplace and the commentators. As you may be aware, you take basically the 2019 average monthly payroll costs, adding a few things like retirement benefits, employer match, and health insurance, and then you multiply that by 2.5, and that's in theory the loan you get, and that you're supposed to use it for certain things for the next 8 weeks. Their definition of payroll cost, so it hasn't really been identified, because some people out there think you can include the payments you make to independent contractors, which would greatly affect many people, because then that payroll cost average would be much higher. And don't worry about it if you haven't heard about it at all, because it's all these are due, everyone files on April 3rd, and I'm still waiting. So if you don't haven't heard about that particular issue, don't worry about not commenting on it.
No, you know what? I haven't heard about that particular issue relative to definition of payroll. I can tell you that there are a abundance of calculators that are already being published right now that are available out there. So whether or not those calculators have contemplated that question on the the calculation of payroll, that's the first time that I've heard that issue. I will tell you this though, the SBA released their regs yesterday.
Yeah, they didn't really get into any detail. They just said similar compensation. They're pretty lame at the moment.
Right. Well, but the reason I brought that up is you'll note that the legislation itself said up to 250% of that payroll deduction that you just talked about.
Well,
The regs are not 250%.
Yeah, that's okay. Okay, well, thanks very much.
Yep.
Hey, John, this is Jamie. What are the regs then? If it's not 2.5 times, then what is it? I haven't heard that part of it.
Yeah, it's definitely 2.5 times because I have the application in my hand. It's a very simple application. You put the number in, and then it says times 2.5, and that's the number. It's surprisingly simplistic, the actual application. It's pretty bizarre, actually. It definitely is 2.5 of whatever the key is, whatever the average monthly payroll. That's the wild card.
Hey, Jerry, I've heard that that independent contractor question came up, and it was any 1099s or independent contractors that would normally be deemed on payroll and not for services. So I take that to be as if you hire a per diem guy to do some contract tax preparation for you, but not your landscaper.
Because, to some extent, it's double dipping because, everyone can file, for the most part, April 3rd, which is 2 days from now. Independent contractors and self-employed can file next Friday under the program. So let's pretend I have one independent contractor who I paid $60,000. If I added that number to the total payroll cost for the year and divided by 12, it would be double dipping because he's going to use that same 60 when he files next Friday. So intuitively, I don't believe you should be including independent contractors, but there's major banks and major law firms that are of a different opinion. And, you don't want to get it wrong because if you file on April 3rd and they blow it out, then you might be out of money because it's a first come, first serve. So anyway, it's sort of a conundrum.
Let me say this, and you all, look, I'm not a CPA and I'm not an attorney, so there's people on the line that they're going to know so much more on this than what I am. But as I'm digging in and working with SBAM on the development of some of these tools, I think it's important, though, to understand that there may be some differences between what the legislation put in place and what the regs have put in place relative to other issues. And I'll use an example. The legislation said that the term of the loan, so let's say you get X amount of money and 50% of it ends up being forgiven because of what you use that money for. The term of that loan for that remaining 50% that the business is on the hook for, the legislation allowed for the term of that loan to be up to 10 years and up to 4%. My understanding from my reading of the regs is that what they've come out with, and they've said it's going to be 2 years and it's going to be 0.5%. So that complies with the legislation, but people read the legislation and they think if I've got 10 years and it's going to be 4%. No, it said up to 10 years and up to 4%.
Yeah, I'm pretty confident it's up to the 10 years. But we'll see.
Jerry, the part of the regulations that came out indicated that it's, I agree with John, because the thing that I had seen from Treasury actually said 2 years and 5%. There's a borrower information sheet that was put out, I think, by Treasury, or it's on Connect, that Leon had put up. And that does say interest rate at 0.5% and in 2 years. When is the loan due in 2 years?
Okay.
So, for those that haven't been, Leon put out 4 things from Connect from the Treasury, including the application, a lender thing, a paycheck protection program information sheet for the borrower, and one other piece. And I believe that all came from Treasury. Or the regs.
Other questions?
Yeah, Jonathan Satterfield. I've got a question. Does anyone on this call have an SBA lender or banker in particular or two they feel is well positioned to deal with those small business clients who need some help working through this process? Because my understanding is for the PPP, you're going straight to the bank. You're not doing the online application. You're working through an SBA lender, a bank, or a credit union. And please, someone correct me if they know otherwise or have seen something else. Thanks.
No, you're definitely going with your local bank because the Treasury Secretary Mnuchin essentially is deputizing every bank to be an authorized SBA lender. But many people have said if the bank you're using is already an SBA lender, they sort of they're a little bit better to deal with. Our bank for the company in Ann Arbor is PNC Bank. They seem to be very proactive, sending emails out every day about when you can apply. You're going to apply through our portal. We look at the documents because, on the second page of the application, it just mentions some documents will need to be submitted. Presumably, the main one will be Form 940 because that actually captures all the earnings. The 941 doesn't capture the earnings because, of course, 401k and flex and insurance doesn't. So apparently, like PNC has told us, we are the underwriters. We look at the documents and sign off on the number that you put on page 1 of the application. And so if you go to the Small Business Administration, they have a list of all the lenders that are already approved. You might want to pick one of those. But PNC is, in fact, an SBA lender.
And Jerry, just to expand on that, because I use PNC too, and I've got a relationship there as well. They've sent a list of checklists, but they have also told me that initially they are only going to work with clients that they have deposits with. So I think to your question, Jonathan, your clients are probably going to have to go first to their bank, because I don't know if banks are going to be looking to process this without a deposit account.
That's a very good point. I can't imagine they would.
Right.
No, I'm not muted. I thought maybe I was muted. Let me say this too. I alluded earlier to the SBAM, not to be confused with SBA, but Small Business Association Michigan and what MICPA are working with for those businesses that may not have a relationship with a lender or et cetera. When we launched that concept of what I'm talking about, that web concept, which we're partnering with the MEDC, it's probably going to be found at michigan.org when it's all set and ready to go here in the next 24 to 48 hours. There's going to be a process on there for, find a lender, more or less. Okay, so we're working with the Michigan Bankers Association and the Michigan Credit Union League to develop a process or a portal as a part of that website for hooking people up with a lender in that space.
John, this is Jamie, and I'm going to throw this out to you in the group, and I'm not sure people may be aware of this or no, or it may be for tomorrow's session, but under the lenders, there's an issue there where accountants can be the agent under the SBA and get paid a 1% fee up to $350,000, and then it scales up after the loan value. Have you heard anything on our restrictions to be able to bill our clients or charge our clients, or what are people doing relative to, trying to recoup some of our time? There's kind of a little bit of a conundrum there, because do you charge them? Do you not? It relative to, this is tough times for everybody, but at the same time, we're busier than hell. So I was just kind of curious if anybody knew anything on that one.
Jamie, this is Peg Jury. I'll jump in. We've had some questions on whether or not if you charge that fee on a percent, and you have an audit client, does it make you non-independent on a review or an audit? I have a call into peer review, and James Miller has a call into ethics to say, unfortunately, they made it a percent instead of a flat fee. So we're trying to understand exactly what that does to you.
And that fee is paid by the lender, by the way, though, Peggy, too. It's not paid by
Yes.
the client. So
Correct.
I don't know if that changes the scope or not either.
That's what we're trying to understand.
Okay. I wasn't sure if we had to, if there was a process we had to become agents, or do we just send our bill of 1% to the bank?
That I don't know.
I want to ask a question. This is George. And maybe this is something one of you can answer. So I've got clients that already have employees that are filing and have filed for unemployment, but utilizing one of these programs, the PPP. I know there's also the other program where they can defer the payment on their payroll taxes and take a credit. So we're looking at different options. But how does that come into play if the employees are already collecting or plan to collect unemployment? Can they, is that double dipping if they collect the unemployment and then they start paying them as well? I mean, again, it sounds like a simple question. It should be a simple answer, but I'm just not finding anything out there on that.
George, I think as long as the employees are reemployed by June 30th, I don't think that that'll go against the debt forgiveness recalculation. Now, you may have to do it between that and the origination of the loan, but I think as long as they're reemployed at some point in time, what I've read, the legislative already took into consideration that you may have already laid off employees, and if you lay them off between a certain date, between I think February 15th and April 23rd or something like that, that they would be, and you brought them back in full force, that there would be an element of where that would not be part of the reduce your debt forgiveness.
In fact, that may be advantageous to you.
Yeah.
Let me jump in here. This is Jerry. I think there was sort of two questions in there. Because one, under the patient, from my understanding, the Paycheck Protection Program, if you choose that, you can't avail yourself of the credit for the payroll tax credits.
Correct.
And also in the commentary, the objective of the Paycheck Protection Program is to, in fact, pay employees. So if they've already been laid off, let's say yesterday or next week, many commentators say the bottom line is to quickly rehire them because the mechanics of it. Because if you quickly rehire them, then you're using some of the loan proceeds to pay them, and those are allowable expenses that can be forgiven after the 8-week period. So if you wait 2 months to hire them, they're on the payroll again, but you will have only paid them maybe for a week or two. And the overall objective is to not let them go, is to pay them, and then whatever you pay them is forgiven, that part of the thing. So it's sort of a two-pronged thing there.
Well, there's the Jonathan Satterfield. There's another opportunity here, which is, granted, we're all looking at the upside on this, but we don't really know how long it's going to last. I think a big push of this is to keep people out of the unemployment system while simultaneously supplementing the individual incomes, kind of for a lot of these small businesses. So, Jerry, to your point, if you quickly rehire them, yes, they're in the unemployment system, their application might have got approved, but you're going to report those wages, or they should report that payment they're receiving for quote unquote not working, so unemployment won't actually charge them a week because they're not paying them. And if you have to lay them off again in 8 or 10 weeks, their unemployment application is already approved and they're getting paid, they're just not back to work. It's kind of, you win on both sides. They get paid, you don't have to pay them to sit at home potentially and do nothing. I think in a lot of terms where like the work isn't even there, it's like, yes, I'm going to pay you to stay home.
So, I'm sorry. So, according to George, to answer there are 3 things that are gonna, or 2 things that are gonna prevent you from getting a full forgiveness. Is 1, if you lower your head count. 2, if you drop your payroll by 25%. But they say you have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So they can still be laid off now, but at some point in time, you're going to have to bring them back in to full-time employment to previous levels in order to not get part of that loan, or to get part of that loan forgiven.
Yeah. And one of the challenges that one of my clients has is that they've already been notified by their customer that they're not going to bring back this piece of business, and they contract out a lot of work.
Well, so
they've
the drawback to that is it's not forgiven, and they've got a 2-year 0.5% loan, because as long as it's still used for payroll going forward, I mean, that's just the element for the for the forgiven portion of it.
Right.
So I mean, they're still getting so from your perspective, have them still apply for the PPP. They're just not going to get it all forgiven.
Right.
That's all.
Right. Okay. Thanks for the input.
Hi, this is Regina Knock, and I am wondering what advice you guys are giving to people that are self-employed, Schedule C people. Obviously there's a lot of people that, for example, hairdressers, that they're self-employed, they run a Schedule C, who knows, maybe they even have a couple employees. Anyone that's on a 1099, I mean, they're saying, yeah, go ahead and apply for unemployment. And then it turns around and obviously rejects them because they don't have any wages reported to unemployment. If it's something that, what advice do you tell them? Is it go ahead and take your chance with some of these loan programs, or is this something where we're hoping that in the next couple weeks that the state of Michigan UIA gets its act together and we'll finally be able to tell them, hey, submit your Schedule C or submit your 1099 to prove what your wages were? I mean, do we know what the plan is for all of these, for all these self-employed and gig economy people? Because all it says that the state is working on something, but I haven't heard anything to say what exactly that is.
I had a couple of people ask me that question. It seems like it's a break even, because under the Paycheck Protection Program, independent contractors and self-employed can file next Friday on April 10th. Somewhat undefined as what they're going to put on the application, but versus these supercharged unemployment insurance. Like in Michigan and other states, you might get whatever it is, $250 to $350 a month plus $600 a week, or $250 or $350 a week plus $600 a week from the feds for 4 months. So it seems almost impossible to calculate, but will you get more under the Paycheck Protection Program, or going on the supercharged unemployment with the Fed $600 additional each week? It's very confusing.
I don't know, Regina, the answer to your question relative to a timeline on when UIA is hoping to be able to adjust their eligibility or application process relative to 1099 applicants. But let me see if I can get an answer to that question, and I'll work with Rachel to get it to you.
Yeah, because that would be great, because I got probably a dozen hairstylists that they're, the salon is shut down. They have no source of income. They can't claim unemployment. And I don't know what to tell them. I say, maybe you could pay yourself via this PPP afterwards, because a couple of them do have LLCs. But I mean, as for the unemployment, they're panicking, because I just told them, go ahead and certify like you would normally certify, and maybe the stuff eventually it'll catch up, but when that is, I don't know. So I'm just telling them, here's your Schedule C, get your QuickBooks squared away in case we need to prove what this looks like, and we'll go from there. I guess I'd like to have all the answers now, but I think this is all just a waiting game anyway.
I think one of these executive orders, so this is 2020, that was a shutdown. One of Whitmer's executive orders, like 10 or 11 or 12, I thought she expanded the unemployment insurance to those typically not covered, such as those you were referring to. And I think it's either 2010, or 11 or 12, or maybe even 8 or 7 before that. But they're all available. You just type in executive order number. One of them, I believe, opens the door for self-employed and independent contractors to file for unemployment in Michigan.
eligibility for unemployment in this state has unquestionably been expanded through
Right.
those executive orders. There's no question about that. And I provided some information very early in the call relative to where you can find those executive orders and the press releases associated with them and FAQs around that. I think specifically what Regina's question is relative to, okay, so they expanded the eligibility, but it seems as though at least the online application for UIA hasn't caught up with that yet, insofar as their a 1099 individual may be eligible under the expansion, but if they apply online right now, they're still kicked out as ineligible.
Right. They don't have any reported wages to unemployment. So, you know, your initial determination is based upon whether or not you had wages to begin with. And if obviously they're not there, they're getting rejected, which, I mean, it's not surprising. It's a computer system, but obviously, you know, we also know that there's no way in hell to get a hold of anyone at unemployment. So I guess, yeah, you know, I just told them we'll wait and see what happens.
Regina, I have a contact with the unemployment insurance agency, so I will reach out to him as soon as we get off of this call and try and get an answer for you, and I'll send that over to you afternoon, hopefully.
Oh, you're fabulous, Rachel. Thank you so much.
You're welcome, and I'll take this opportunity to say if any of you are having any issues with the agency, please send them my way, send them to Jody on our membership team. My email address is rreardon, my last name, REARDON, @micpa.org. And I'm happy to reach out to my contacts with the state and get some answers for you. The state is obviously incredibly busy right now, but my contact has still been very responsive to me. So if you are hitting roadblocks and you need some answers, please reach out. Let us help you.
Hey, John, I have another question for you. You know, I know that the stay-at-home order is going to supposedly be lifted by the next week or a week after, whatever Monday, a week from Monday coming up is. Is there any talk so far that there's going to be an expansion of that? And if so, do you have, you know, is the governor given a timeline of when she thinks she may make that announcement at all, or is it going to be a last minute type thing? Because I've got to imagine they're thinking that through. President Trump just expanded the 6 foot social distancing till the end of April. Seems like things are staying in lockstep with a lot of that stuff. So I was just kind of curious.
I think that you're going to find, Jamie, I'm not sure. I think you were on at the beginning of the call where I said the legislature's coming in next week, a week from today. Yeah. So they're coming in. There's a process here insofar as so much of what the governor has issued via executive order is based on the authorities that are granted to her through the declaration of an emergency. That emergency declaration can only last so long before it has to be extended and renewed by the legislature, thereby extending and renewing the governor's authority to have issued those EOs and extend those EOs. So the answer to your question is, I absolutely expect that the stay-at-home order is going to be expanded. I imagine at this point in time, they probably what they're really looking is 28-day increments. Jamie.
Wow. Okay. Thank you.
Do we have any additional questions for John or Rachel? Okay.
Right.
If not, I just want to remind everybody that we're going to be hosting another virtual roundtable discussion tomorrow, again from starting at noon and then wrapping up somewhere before 1:30. We'll see how long the discussion carries on. That one is going to be an economic update with Leon Lebrecht, and I know that many people have been taking advantage of Leon's knowledge and resources via Connect, and so we're very happy that he is going to be able to hop on the Zoom video conference call tomorrow. And if everybody's free, I'm hoping you'll take advantage and join us for that one as well. Of course, we want to thank John and Rachel for their time today and their expertise. And as always, thank all of you for what you guys are doing, your continued support of the MICPA and the profession, and of course, all of your clients at this strange time of business and being a resource for all of them. If there's anything that we can do to be a resource for you, please, we encourage you to reach out to us, via chat, a phone call. We're literally just a click or a call away. So again, thanks everyone. Enjoy the rest of your day, and we'll hopefully see you back here tomorrow at noon.
Great, thanks very much.
Thanks, everybody.
Thank you.
John. Thanks, Rachel.
Thank you.
Thanks, John and Rachel. Appreciate it.